Hello and welcome everyone. This is going to be an ORPH trade breakdown. A little pre-trade context here is we have aspirants 18, 19, 20, 21, 22, 23 that are all above print personality. And as you can see, we haven't built from those aspirants that they've showed. It's been their money time. The 20 aspirants alone told us that it needed a $2 pullback just from the increments it trades in. As you can see, we just ripped right through 20 with aspirants above personality. We never got that pullback. So essentially right now, we're in money time. The only reason for a stock to be in money time and for them to not pull back on those aspirant positions that they've showed is because they've already built enough of their position and this is the release of their position. So they're making money on this. And as you can see in that consolidation throughout the whole day, around 18, that was used for them to acquire, and now they're in the money as they're pushing the stock. So the stock is currently an exception, and if you just pulled it up and you were watching it print, as a newer trader, you know you can't chase this stock long. Rich teaches us students not to chase this long. You have to be a higher level trader and recognize and be experienced to take this long. However, exceptions always do come back to reality. And the best time for an exception to come back to a reality when it's extended and it's far away from where it needs to be, and knowing that it never came back and built under 20 when the market maker told us that it needed to. Our game plan right now is we're going to look for a stock to give us a proper pullback. So our number one short trade setup, we're looking for a real true pullback. And the lesson here that I really wanted to point out was, what does a proper trigger need to look like in this stock for us to go short, knowing that the stock needs to pull back to 20 from what the market makers told us. Yes, the stock has been an exception in money time, but we're looking for this stock to come back to reality, and this stock is not going to continue to push like this as an exception forever, so we're anticipating the number one short trade. So a bar in this to take short is going to be about $1 to really dollars should be minimal, but really $1.50, $2 bar to take this short. So now we're just anticipating that number one short trade. We're setting up a price target of 20, conservative. And now we're just identifying and analyzing the prints as they come, finding the best possible setup for a number one short trade, as this stock is very overextended and needs to build from all the prints that I gave us on the way up. So we're just in a consolidation here. We're setting up our order. So our order entry right now is going to be in reality 2250-ish area right now. If we do get a bar here, it's going to trigger. The trigger should blow past 22. It's going to be $1.50 trigger in one bar. The price action is going to be to that $1.50 range. So we want to be able to catch that. So we're going to be about 70 cents below where this is currently at. But again, we're just in a consolidation. We're just preparing for that short trade. Some nice selling there. Off level selling above 23. It's a good sign. 2250 bid. Still not a trigger. It's regular price action. Getting ready to take a trigger here. If it breaks through, I have my order right here. Probably slightly above 22. If we get great price action and continuation here, this will constitute a trigger. But it needs to break 22. So I would put my order a little bit more down because that wasn't a real trigger in my opinion. It's pretty similar to the rest of the price action, so my order would be closer, slightly above 22. This trigger needs to get follow through and blow past 22. The trigger is not going to be slow. It's going to be fairly quick and it's going to be fairly fluid. As you can tell, like this is just to bar down. It's regular price action. It's not exactly what a trigger should look like for them to come back and steal shares. because the whole goal of our trigger is to get away from our entry as fast as possible. And if we would have took that there, we would possibly be shaken out or have the high possibility of being shaken out. It just didn't give us that fluidity and the size of the price action that we were looking for. The selling was nice though in terms of that off level. So now we're just waiting. So we have our order above 22 looking short. Price target is going to be 22.20. So we're looking for a $2 trade here. Back to 20. $2 trade conservative. See, we would have been shaken out if we took that bar. Because a regular price action was not a trigger. 23 asks, that's fairly small compared to what we've seen. So that's nothing really. But we would have been shaken out on that because that's regular price action. It's not what a trigger would need to look like. You see the trigger that went through 20, above 20, that's what it needs to look like, but to the downside, and we're ready for it. And above 22 right now is a good place for us to be able to catch this, because this is going to be a $2 trade, and I'm willing to risk 50 to 60 cents to make $2 on this trade. And we know 20 is going to be conservative, really, because that market maker at 20 told us that it needs to pull under about $2 for them to build on the position that they showed. So we're just waiting for this stock to come back to reality, to come out of exception mode for the market makers to steal retail shares here. Ideally, it would be a push to 25, and then we get huge aspirants there because it's a psychological level. But just knowing how overextended this is right now, I'm still preparing for that huge trigger down. And also knowing that we can't take this long, we're just preparing for that large number one short trade, reality trade the whole way up. So just in the consolidation here. No prints to really note. We already have our whole game plan. The market makers already told us this was an exception. Eventually it needs to build. And now we're just looking for it to come back to reality, come out of that exception mode, come out of that money time. We're also not seeing like the off-level buying prints throughout this whole time. That shows that this thing is going to push to 25. If this was going to push to 25, within this consolidation, we would have been seeing continuous off-level buying. The money flow would be dominant towards the buy side, and right now it's just not. It's not been in terms of off-level to the buy side. I would say it's maybe even leaning more towards the sell, but just knowing this is overextended, they don't even need much selling to really give this a large pullback. So we're looking for our trigger here. Some nice off-level selling, 22.50. Still just waiting for the trigger. We're just looking for that proper price action. We know once we get that proper price action, the follow-through should happen in terms of off-level selling as well. And we're also in a volume pattern right here as well, so this is a good time to anticipate that bar to come. And we would have anticipated this being our trigger, and we would have been in this above 22. 22.10 to 22.20 range where we would be, and boom, that's our trigger right there. We had to anticipate that was going to be a larger bar. Obviously, you can't take the trigger at the bottom, right? We can't enter here because our risk is a lot higher there. We have to anticipate the bar coming in, and that volume pattern that came in that we saw present. It was a volume dip, and then it was just setting up for a large bar there. We knew it was to come. We knew what it needed to look like. That is what your trigger needs to look like. Those are the bars that your entries should be in, because like we're in a, say we're in at 22.20, we're up already almost $1 on our trade, right? So, and then that's what a release needs to be. We outline what it needs to be for the pullback, for us not to get shaken to a high percentage. And it did exactly that. It gave us the volume and the proper price action, and now we're in this trade. We're almost up. We're up about $2 right now at this point, hitting our price target of 20. So that's just right there. That's your trade right there. Price target of 20. I would have taken some off right there, just because that is our price target. I really should pull down under 20, but we know that it's not going to happen all in one fluid motion to high percentage. So not going to give up $1 of my trade in that instance, knowing that the range this thing has should break 20, but odds are this is probably going to consolidate above, gain some momentum, and then break 20, or it'll pop back up to 22. So overall, though, we outlined our trade in terms of what the market maker's intentions were. Some nice selling there as well, 21. We know that market maker wants to build. They showed us their intentions were to build in their 20, so we're sticking to that plan and understanding what their game plan is, and we're following them. We understood timing of they were in their money time, but overall their intentions were that they were going to pull the stock back to build, and now we're just waiting for them to show us that they're going to break 20. So that's why 20 was conservative, just because that's where that market maker was. But overall, 18 is a real possibility here. I don't believe I got the full recording to 18, but it did end up pushing to 18 on that pullback. I think it might have even gave us a larger pullback than that. But I just kind of wanted to do a lesson here on what triggers need to look like. So I outlined exactly what a trigger needed to look like. That's what you need to be doing with all of your trades and all of your game plans, is what does the trigger need to look like for me to be able to get into this, for my entry to get as far away as quickly as possible without any shakes, right? I don't want to get into a bar and then be shaken out. I don't want to get into a regular price action bar and then be shaken out. Triggers need to get away from your entry as fast as possible. So that's kind of the lesson there for the day in terms of triggers. I know a few of you wanted me to touch upon triggers. Let's review the overall read of this trade. I know I had a few people that were confused that messaged me that said there's a bunch of buying all the way up. Why would I be looking for this short? And the answer to that is, when we have market makers that print above print personality at levels, per our rules, that tells us that it needs to pull back first for them to acquire shares, and then trigger up for them to make money. So accumulate on the pullback and then release it. But once you get to a point where they have enough shares, like they showed they accumulated at 18, they ended up releasing it. And just because they're in money time and they're releasing it doesn't disregard our rules. Eventually, those prints at those levels, such as 20, need to pull back. Just when it becomes an exception in money time, it's not in that moment, in that instance. They're releasing it. They're releasing their position to make money. Why would they want to hold it back and build more if they have all the shares that they need? So that's what this was. And you can tell within the volume of how they accumulated and released. And then we know that every time it gets extended like that in terms of aspirants at multiple levels, the short trade and the reality check will always come into play. It's just a matter of finding the right timing and right trigger for the short play to come back in. And that's pretty much it. So it's a shorter one, but it was mainly a lesson on triggers, what a real true trigger need to look like, and then the overall game plan of how to trade an exception stock and when it comes back to a reality, and how to identify when it comes back to a reality. All right. Thank you all for listening.